Welcome to the Gold and Silver Club end of week review presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Today we'll be reviewing the latest developments in the commodities markets and analysing the week's performance. The live session will cover an end of week summary for gold, silver, oil and the commodity currencies, the top trades of the week. We'll be looking at live market commentary and technical analysis, as well as looking at the week ahead, so key events, looking forward, and of course answering any of your questions. Okay, so gold price this week has been particularly interesting. So the Federal Reserve, again, causing quite a lot of volatility within the market. So we'll be looking at that very shortly. Gold has slipped slightly today, but it is headed for its biggest weekly gain in nearly 2 years. Gold has gained close to 5% this week alone, on course for its biggest weekly climb since October 2011, when it rose to 6.2%. Spot gold hit a high of $1,298 an ounce and 36 cents on Thursday, its highest in nearly 3 weeks, easing this morning slightly due to profit taking after 4 days of gains. So gold has lost nearly a quarter of its value this year over concerns that the US Federal Reserve's $85 billion monthly bond purchasing program will be halted soon. Fed Chairman Ben Bernanke confirmed the fears in June, saying the rollback could start later in the year. However, this was the big news, and this is why you really have to watch those Federal Reserve announcements. The Federal Reserve Chairman Ben Bernanke said on Wednesday that the overall message from the central bank was that a highly accommodative policy is needed for the foreseeable future. So financial markets jumped on Thursday with the Dow and S&P 500 indices hitting all-time closing highs, and we saw gold and silver rally off that as well. Gold traders in India, the world's biggest buyers of the metal, have refrained from fresh purchasing as the gold market climbed to the highest levels in more than 2 weeks. So the big question really will be whether we're going to continue this rally into next week. We're starting to see certainly some profit taking this morning, so we'll take a look at certainly the gold charts, oil charts, silver and the commodity currencies. Okay, so for those of you who are new to our weekly report, I'm Phil Carr, professional trader, trainer and speaker. And of course, for those of you who are regulars on this, welcome back. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for all our traders, and also a regular contributor to a number of financial publications, speak at numerous trading seminars, webinars and workshops. This is Nick Kelsey, joining me on the call, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge fund and investment banks. Through his first-hand relationship with some of the world's most successful traders, he discovered the formula, the mindset, and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business financial publications, and we've appeared frequently on financial television. And so here's ourselves just recently on Swiss television talking about gold and silver and some excerpts of recent press the Gold and Silver Club has been in. Okay, good. So with that, we're going to just take a look at the gold price before we go into our top trades of the week. So sitting very interestingly at a key level actually right now, $1,276 an ounce. So we're going to have a look at that on our chart shortly, but it's certainly quite a rise from where we were sat this time last week. Okay, so with that, we're going to move on to our top trades of the week, utilizing the Gold and Silver Club signature trading strategies. So one of our top trades of this week was really being able to trade the Federal Reserve announcement. We had a really nice box set up, which had been developing throughout Tuesday and Wednesday on gold. Really, there was quite nice resistance around 1260, and that was giving some support down to 1240. We did finally see a breakout. This was in GMT. This is more in the evening, probably about 10 o'clock in the evening, London time, that we started to see this breakout really gain some legs, and we saw overnight just the market rally all the way up to just underneath the 1300 resistance level. So we actually had automatic take profit level on this, so which got hit just overnight whilst we were sleeping. So the risk on the trade was 90 points, so $900 risk on the trade for 270 points. We got out automatically at 1289, which was a previous level, a bit more of a conservative level of resistance. We didn't know if it would have legs to get all the way to 1300, but that's certainly a nice 3-to-1 risk reward for a day trade on gold. So 90 points to make 270. That was on Wednesday evening, during the evening after the Federal Reserve announcement. WTI Oil, which has been looking really interesting this week. So we've obviously had a really strong rally over the last couple of months on both WTI and Brent crude oil. In fact, the spread between those two has become a nice setup just on Wednesday night, Thursday morning as well. And you can see they're really nice. We had a level of resistance going back to 2012, which was just around the 106.50 level, and we had confirmation of a sell short at 104.95. So just we've entered into one of these. We're out of the position for a day trade, and we've also got another position we're going to hold longer term on this and see if that can gain some legs. So entry on there was 105.95, came out for a day trade 103.69 for 126 pips. This was just yesterday. 65 pip risk on the trade. Each lot traded $650 worth of deposit for that for 126 pips. So just a quick 2-to-1, very quick in and out. Oil, often if you catch oil right, gives you that nice risk to reward fairly quickly because it's so volatile. So that was our WTI oil trade. Also Brent crude, very similar setup on Brent crude. You can really pick one or the other, or if you decide to split your risk between the two, we wouldn't advise always trading both at the same time because you're going to overexpose yourself. But if you divide the risk by 2 and do it across both of these futures, that's fine. So Brent crude oil, we also had a very similar setup, actually even more of a stronger setup there. A lot of confluence for that trade to come towards a resistance channel, also a horizontal resistance, key moving average. Nice setup there with the inverse hammers, and you can see where we've just sold off from 108.24. We've caught the trade down to 106.99, 125 pips worth of profit. So the risk on that, 55 pips, so $550 risk for $1,250 profit for a quick day trade. Quick 2-to-1 on Brent crude oil. And also USDCAD really provided a nice breakdown after the US dollar index also got hammered after the Federal Reserve announcement. So we saw USDCAD broke a trend channel which had been starting to form throughout the last week or so. Actually, over 10 days now, it started to form that rising trend channel. Once we broke a key moving average, we saw quite a nice move toward the downside for a quick day trade. So entry on there, 1.0525, and came out at 1.0413, key level of support. 46 pips risk for 112 pips profit, so nice 2-to-1. Quick trade again on USDCAD. So these trades that you tend to get off Federal Reserve announcement and the non-farm payroll, they can very quickly retrace. So you can see a lot of volatility. So it's not always advisable to keep your positions overnight. It's nice to be in and out, bank your profits, and then you've got a new day which you can use to with the additional cash for your trading account. Okay, so what we're going to do, we're going to flip over to my screens and do some live technical analysis. So if you've got any questions at all, do post those as well whilst we do this. Excellent. Okay, right. The first chart I wanted to show you is, in fact, we'll just go here and we'll have a look at the US dollar index for you. So this is just on my Thomson Reuters platform here. So what I've got here, the bottom right-hand corner, you can see the US dollar index, which absolutely got hammered on Wednesday when we had the Federal Reserve announcement. So with this, we know gold and silver moves absolutely the inverse to the US dollar index. So you can see there where we had that huge fall to the downside. Gold, silver rallied, a lot of other currencies against this rallied Australian US dollar. New Zealand US dollar, the euro rallied, USD Canadian dollar followed the US dollar index down. So very predictable once you've got this like key indicator with the US dollar index as to what's going to happen with gold and silver. Here you can just see the top gainers of the day today. So we're just seeing how we're doing today. In fact, gold, silver. The US dollar index is actually putting in a bit of a relief rally today. We're back up to around 83. You can see the dollar index is actually gaining strength today. US dollar, Canadian dollar is gaining strength while we're seeing gold, silver, New Zealand US dollar, Australian US dollar here all losing some strength over some relief rally on the US dollar. So that's the first thing we want to take a look at. Just look at our fundamentals, look what's going on in the overall markets. Okay, so next we are going to go and move across to our charts. First chart we're going to have a look at is, this is WTI Oil, West Texas Intermediate, and you can see here, just going back on the chart, that we've got a key level of resistance here going back to 30th of April 2012, and with pinpoint accuracy, that's where we found resistance just this week. So we were already watching that level anyway to see whether we would get some sort of reversal at that particular level. We do seem to be quite overbought at the moment on WTI, but this may just be the only part of this particular move. We've moved so far about just about $1.50 since we shorted WTI. We're finding some support this morning around the 103.69 level. Now, if I was looking to take, if I was interested in monitoring this further and taking additional positions, I'd be very interested to see whether this level is now going to get broken. So the 103.59. So you can see this whole level here where we're finding support. So we may just find this level get supported today, in which case we are in an overall uptrend on this market. Obviously, this would be selling short into something like this is a counter trend trade. You can see the overall uptrend, which we're quite a sharp uptrend, which has been helped by the unrest in Egypt at the moment for WTI and crude. So you can see this uptrend that we're still very much in. However, if we do see a breakdown just below 103.54, I'll be paying close attention to that to see whether we're just going to get a sell-off, quite a large sell-off actually. We could see quite a sharp and short move back towards the 100 level. So we'll be watching out for that on WTI, and yeah, that's what I'll be looking at the moment. Just put it for our time frame, we'll have a look. Yeah, we are seeing a little bit of support at the moment around these key levels around the 104 level really to 103.50. So those are the key levels to be watching at the moment on WTI. Moving across to Brent. Brent was quite predictable to us in terms of even just take profit, which we're seeing around the 108.70 level, which happens to be a key Fibonacci level as well. But we also got this upward trending resistance channel on Brent crude oil. We came across some resistance again at key moving average, and we're also finding support around the 107.17 level. So we see whether this is going to be the next leg up. I suspect that we're going to be very geopolitically driven on oil over the next week, depending on what news is coming out of the Middle East and Egypt, in particular with the Suez Canal. And we will be watching any fundamentals there closely. But a break of 107.17, I would also be paying close attention to, because we could see this market, if it is severely overbought at the moment, we could see the market tumble down and give some very quick gains for sell short. So we'll be looking at that for Brent oil as well. Moving over to USD Canadian dollar, I would note USD Canadian dollar just on a 4-hour time frame is starting to put in, we're starting to see this trend channel develop in USD Canadian dollar. We're finding a little bit of support today, same as the US dollar index, where the US dollar index is finding a bit of a relief from the downside pressure today. So we could see USD Canadian dollar start to work its way back up. We'll be watching the US dollar index closely for that, but just note that we have found support there. I'm certainly not going to be looking to short this market at the moment. Around the 1.03241 level, we have found some support. We've got some key resistance levels above that at 1.0414 and also 1.0446. So that's what I'll be looking at, USD dollar, Canadian dollar at the moment. Just want to be able to draw those trend lines on and just see where the market's edging its way upwards currently on USDCAD. Okay, moving across to gold. So gold, interestingly, actually very similar. It's starting to find a trend channel now. This trend channel started to develop last week when the price actually found support at an odd an odd price there at 1207, where it hadn't really found much support at this level previously. A lot of traders were looking for short sells down to the 1200 level, down for the 1180. But if you go onto the chart, we were starting to actually develop this trend channel, which has now found again resistance right on a horizontal level. Also happens to be a key fib level, but 1297 is where the price just rallied up to with pinpoint accuracy after the Federal Reserve announcement. We've come down on this market to the 1276, also a key price action level, and we're finding a little bit of support there at the moment. So whether we're going to see this market, I wouldn't. Again, Friday trading can be a bit risky, taking trades into the weekend, leaving positions on overnight, particularly on the short side with gold, with a lot of the buying that occurs on the Sunday open in Asia. So sell short positions will probably need to be in and out quite fast, I would imagine, in order to take this market down. But if it was to come down lower, we could see potential levels of support around the 1250 level. That's where I'll be looking for potential levels of support. And if this market, just going on the daily time frame here, was to rally further, I would, first of all, the 1299 is an important level for gold to break through now. It provided resistance after the Federal Reserve announcement. You can see where that provided resistance mid-June as well, 21st of June. We've got two tests of that particular level. A breakout from this level, I would be looking at 1321 to 1333 area as potential profit targets. And then above that, 1353 is going to be another key level. So we'll be watching that closely, but I'll just keep an eye on this trend line which is developing, and we could come back down just to retest the 1250 level on this. Yeah, so I'll be watching that very closely for gold right now. But I'd like to see a little bit more. I think this market is going to give us more indication next week as to what its next move is going to be. Moving on to silver, very similar story actually. Silver hasn't had quite the gain that gold has. You can see we've been halted here in terms of the resistance level just at the 2014 level, where we've seen that level provide resistance on the 21st of June as well. So that has been obviously a key level that traders were targeting who were going long as take profit, or traders are also selling short from. So we're coming back down to retest here the 1978 level. So at the moment, really, we're a bit neutral in terms of both gold and silver at current price levels. We're not really at major event areas where I'd like to see really good risk to reward trades. For me, the oil, Brent and crude, Brent and WTI are very interesting right now. But certainly moving into next week, you want to be aware of key price levels. Again, we could come back towards testing the lower trend level here, trend channel on silver, which would take us around to 1950 level. And if we can get a breakout beyond this 2014 level, really just spiking above 2029, 2030, then I would be looking at two key levels above. First of all, I'd look at 2070, and above that, I'd be looking at 2153. So those are key areas I'm looking at on silver currently. Now moving across to the commodity currencies, so you've got Australian US dollar. That's looking very interesting this morning. So Australian US dollar testing 3-year lows right now. Actually, we've got a very obvious sell short inverse hammer there. You can see it's like a gravestone doji on the daily time frame there, which gave us a sell short signal just yesterday, and that's actually worked out particularly nicely there. So you can see just market has come all the way down about 115 pips. So we'll just take a quick look at that. Yep. That has given actually quite a nice move. So it's very interesting that we've actually found support again right at the 2013 low, 0.9040. So we just go into the 4-hour time frame here. There you go. So that is pinpoint accuracy. So tells you one of two things. Number one, traders who are selling short this market are targeting this exact level for taking profit, and buyers are also potentially into this. So I'll be going into the tighter time frames here, just to, if you are a trader that trades Australian US dollar, yes, you do want to note what's going on Australian US dollar right now. We have bounced off that level with just pinpoint accuracy. So that's one to monitor today, definitely one to monitor at the moment. Although, having said that, the more times we test the level of support, the more likely it is to break. You've got to think of sometimes support as a pond that you're throwing a stone on. So you're throwing a stone when you play that game when you're younger, where the stone would bounce, have bigger bounces as it bounces across the water, and then slowly it's going to have more bounces before it finally breaks through. That's what you tend to find when levels of support are retested and tested a number of times. So it's not always the case that the more times the level of support is tested, the stronger it will be. Sometimes the more times the level of support is tested, the more likely it is to break. So watch that on Australian US dollar. See if we get a bounce or we get a breakout today. But we are at an event area right now. So that's, for me, that's going to be one to watch definitely this morning. Australian dollar, US dollar. Okay, so moving on to New Zealand US dollar. So holding up a little bit better than Australian US dollar this morning. Let's just take a look. We had a nice box set up on that market as well. But you can see where we had the breakout, the Federal Reserve. And then we also had really a whipsaw in price. We've got this massive doji, real big tail either side, indecision in the market. And we're just really tending to stay consolidating within this market, New Zealand US dollar. So there's no real reason. There's a bit neutral right now where the price is. You can see we seem to be just coming down, moving still between these key levels, 0.7672 level of support up to 0.78853 level of resistance. Yes, we did spike through that on Federal Reserve comments, but now we're back within that consolidation phase. So we'll be watching this closely to see if we're going to break either side of this consolidation phase and really put in a nice move to show the next, whether we're going to stay within this downtrend on New Zealand US dollar or whether we're going to put the next phase in this market to bottom out and slowly start to form an uptrend. I would very simply just, you can put in trend channels on this market and just you can note where these trend channels have been in place so far. And really, I'd like to see a proper close. So what we had actually on the Federal Reserve announcement is, although we had a spike up in price, we didn't close higher than that consolidation zone for the day. And really, you want to see this market end of day trading after 10 o'clock in the evening, GMT. You want to see the daily candle close above that consolidation zone. The fact that it hasn't, I would be saying this market could potentially come down again and just retest probably 0.7672 if the US dollar gains some legs to it today. Okay, good. So if there are any questions at all, guys, do post those in the chat. Again, for me, the ones to be watching this morning, definitely Australian US dollar. You can see the bounce that we're having there at the moment. Gold, we want to see if that 1276 level is going to hold this morning. USDCAD, we're forming a little bit that trend channel, see if we start working our way up. And also Brent and WTI, see whether those break down in price or get supported at current levels. Okay, so with that, what we do, we're going to move on to the news of the week. Okay, key events moving forward. So the key events you need to pay attention to today are going to be, number one, we've got 1:30 p.m. we have USD PPI. So the core producer price index measures the change in the selling price of goods and services sold by producers, excluding food and energy. So the PPI measures price change from the perspective of the seller. So when producers pay more for goods and services, they're more likely to pass the high cost to the consumer. So PPI is thought to be a leading indicator of consumer inflation. So that can certainly have an effect on the US dollar index today. A higher than expected reading should be taken as positive or bullish for the US dollar, while a lower than expected reading should be taken as negative or bearish for the US dollar. Major news coming out next week you want to pay attention to, particularly for your gold and silver trading, is Monday the 15th we have Chinese yen GDP. That measures the annualized change in the inflation-adjusted value of all goods and services produced by the economy. It's the broadest measure of economic activity of the economy. Higher than expected readings should be taken as bullish for the Chinese yen, while a lower than expected reading should be taken as bearish for the Chinese yen. So again, that has an inverse, that has a correlation, strong correlation with gold and silver, depending on how strong the economy is doing. Next Monday at 1:30 p.m. we have USD core retail sales, important for your any trades that you have again on gold and silver or any of the currencies which have the US dollar index in them, all the majors. So this measures the change in the total value of sales at the retail level in the US, excluding automobiles. It's an important indicator of consumer spending and is also considered as a pace indicator for the US economy. Higher than expected readings should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Moving into midweek, Tuesday we've got German ZEW economic sentiment. Now that's important because the economic sentiment index gauges the 6-month economic outlook. A level above zero indicates optimism, below indicates pessimism, and that reading is compiled from a survey of about 350 German institutional investors and analysts. Higher than expected readings should be taken as bullish for the euro, while a lower than expected reading should be taken as bearish for the euro, and that's again important because of the correlation with gold. Next Tuesday at 1:30 p.m. we have the US core CPI. So the consumer price index measures the change in the price of goods and services from the perspective of the consumer. It's a key way to measure changes in purchasing trends and inflation. Again, a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. And that's important again because of the correlation with gold and silver. And next Wednesday, another Fed announcement. We've got Fed Chairman Bernanke testifying, so that needs to be in your diary. Of course, as no doubt you know, as head of the Fed, which controls short-term interest rates, Bernanke has more influence, and the Federal Reserve have more influence over the US dollar's value than any other person. So traders closely watch his speeches, as they often use to drop hints regarding future monetary policy. His comments may determine a short-term positive or negative trend for gold and silver. And finally, moving towards the end of next week, we have the CAD interest rate decision given by the Bank of Canada. The governing council members come to a consensus on where to set the rate. So very important for your CAD trade. So traders watch interest rate changes very closely, as short-term interest rates are the primary factor in currency valuation. Higher than expected readings should be taken as bullish for the CAD, while a lower than expected reading should be taken as bearish. Next Thursday, we have the Philly Fed Manufacturing Index. That's again important if you're trading gold and silver. Philly Fed Federal Reserve Manufacturing Index rates the relative level of general business conditions in Philadelphia. So a level above zero on the index indicates improving conditions, and below indicates worsening conditions. And that data is compiled from a survey of about 250 manufacturers in Philadelphia Federal Reserve District. Again, a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And finally, next Friday at 1:30 p.m. we have the CAD core CPI. The core consumer price index measures the changes in the price of goods and services, excluding food and energy. So the CPI measures price change from the perspective of the consumer, and that's a key way to measure changes in purchasing trends and inflation. Higher than expected readings should be taken as positive or bullish for the CAD, while a lower than expected reading should be taken as negative or bearish for the CAD. So yeah, for next week moving forward, do make sure you jot those down, particularly if you're going to have positions on gold, silver, on any of the commodity currencies. You want to make sure you jot all these are the major announcements which are going to affect the markets, these markets particularly next week. Okay, so make sure you've got a note of all of those. Okay, and of course, to request information on our gold, silver, and commodity courses and our live trading room, you can go to www.jointhegoldandsilverclub.com, or very simply contact us at office@thegoldandsilverclub.com. Our London office is 0207 193 0403. Our Asia Pacific office is 852 8191 0403. And in order to do that, just to find out more information, you can just click on Learn to Trade there on our website, complete the form, and you'll get additional information on all our live trading programs. Okay, and of course, make sure you take advantage and subscribe to our weekly newsletter to receive free weekly gold, silver, oil, and commodity currency news, live market analysis, and prices. Okay, good. Well, look, with that, guys, there's plenty to be looking at today, so good luck for the rest of the week's trading. Appreciate your patience for any of you who had also had some technical problems at the beginning of the webinar, but we look forward to seeing you at the same time next week. And yeah, with that, good luck for the rest of the week, guys. So we'll see you then. Okay, thanks everybody, and yeah, see you on the next one. Bye bye.